Hello everybody, welcome to Monday Morning Must Knows. My name is Merlin Rothfeld, and as we approach the end of 2022, a lot of people think it gets real quiet, things get slow. Well, not with regards to economic announcements. We have so many major announcements happening this week, so let's kick it off and get things started. Now, I know, much to your surprise, I'm not going to start things off with earnings. Matter of fact, I'm not going to talk about earnings at all because there's really only a couple names like Adobe reporting, not that big of a deal. So let's dive into the big stuff. First and foremost, let's talk about inflation. Now, a couple of weeks ago, Jerome Powell was talking about core PCE price index, and that number came out lower than expected about 2 weeks ago. On Friday, we had a number come out which dealt with inflation as well, and that was the producer price index, which actually showed a slight increase over expectations. Now, it decreased from the previous reading, but still showing that inflation might be a little bit higher than we anticipate. Now, what can we expect this week? Well, coming out on Wednesday at 8:30 a.m. Eastern Standard Time, we have the consumer price index. And as you can see here, the month-over-month readings show about a 0.4% increase. So it's definitely off the highs we saw a few months ago, but still somewhat higher than average. Now, when we annualize this and look at how it grows over time, the good news for everybody out there in these markets is it is declining. We are seeing the tops dip lower over the past few months, which is right now about 7.7% for consumer price index. Now, this is really important because these numbers are what are going to help craft the Fed's plan with regards to interest rates going forward. And that, my friends, leads us right into our next topic of discussion, which is central banks. Now, of course, we normally talk about the FOMC, Jerome Powell, and what the U.S. markets are doing, but I have 4 central bank announcements this week. Yeah, I know, chalk it up and wipe your brow with a sweat because it could be a very volatile week, but 4 announcements, and let's start things off with the U.S. market. Now, looking towards the U.S., the FOMC statement generally happens on Wednesdays, and lo and behold, it happens on Wednesday as well, 2 p.m. Eastern Standard Time. The expectation right now is about a 95% probability that we're going to see a 50 basis point increase. Now, that's fine and dandy. We kind of know that's coming. What's more important is going to be the press conference after, which starts about 30 minutes after that announcement. And the key here is listen for what Jerome Powell is hinting at going forward. Now, of course, he's trying to be as transparent as possible, and most traders around the world are glued to what he is saying to maybe anticipate market moves and direction going forward. Now, that's the U.S. Of course, that's going to create a lot of volatility on Wednesday, but then we move forward one more day, just one more day, and we get even more action. We're going to look at Thursday's trading activity, and I have 3 central banks for you. I have the Swiss National Bank, and right now the expectations are that they're going to raise, but we're not sure how much. In the previous 2 meetings, they've increased 75 basis points at each meeting. Right now, they're at 50 basis points. Expectations are anywhere between 25 and 75 basis points, and that's Thursday at 3:30 a.m. Eastern Standard Time. Now, moving on, we go to the Bank of England, which has been raising rather aggressively. They are expected to raise 50 basis points, all the way up from 3% to 3.5%. That will be at 7 a.m. Eastern Standard Time on Thursday. And finally, rounding out the trio on Thursday, you have the ECB, the European Central Bank, which right now is expected to raise 50 basis points as well, going from 2% to 2.5%, and that will be at 8:15 a.m. Eastern Standard Time. Now, can we really focus on any one of these and say, here's a definitive play that we can make using those currency pairs? Not really. It could be rather difficult to anticipate what those announcements are going to be, plus the market's reaction. What we do know is there's going to be a lot of jostling back and forth with regards to those prices of those currencies. And what I thought would be kind of interesting is to look at some of the supply and demand grid zones, because there's something on the US dollar, Japanese yen, of course the yen not reporting any rate change this week, but there are some interesting chart formation. So I thought, let's take a peek at our mastermind grid yet again to see what is interesting in the spot Forex market. Now here you can see we've taken a snapshot of the mastermind grid, and most of this is spot Forex currency pairs across the top. You can see the euro, the yen, the pound, etc. What I want to focus on is down here near the bottom. You can see that 133.48 to 132.55 demand zone for USD JPY. Anything in that green area is a demand zone. Any numbers in the upper part, the red, would be a supply zone. Now, when we take a step back and look at a price chart here, you can see that USD JPY, which is the US dollar Japanese yen pair, has been doing pretty good for all of 2022. It's been just on an unbelievably bullish trend. And right now we are seeing this pullback. And We teach impulse and corrective phase, as many feel this is a corrective phase, but the interesting part is it's coming into that area of demand that we spotted on the mastermind grid level. And this may be a potential play for some people going forward. Of course, when you look at supply and demand zones, it's about having a strategy in place, looking for your entry, your stop loss, your price targets, and then crafting a trade around that so we have defined risk and defined reward. Now, if you'd like to learn more about using supply and demand methodology or core strategy taught at Online Trading Academy, you can click that link in the top right-hand corner of your screen to get more information about registering for a free class, both online or in physical locations, to learn more about trading and investing in really any asset class. Now, let's look to the final thing for the week. Of course, we've talked about central banks, we talked about inflation, and I always drive home the point that the U.S. is a consumption-driven economy, meaning we need people to be buying stuff and spending. And of course, with Black Friday and the holiday season, we like to see those sales numbers come in higher than expected. Well, here are the retail sales numbers. This is coming out Thursday at 8:30 a.m. Eastern Standard Time. The good news is, for anybody watching these markets, you are seeing those retail sales numbers increase. Now, we would expect that to happen going into November and December. Well, this Thursday, we're going to get November's retail sales numbers, which should be pretty rosy. Right now, the expectations are we're going to be a bit higher than that 1.3%. But of course, anything short of that could create some waves in the financial markets and cause people to be more pessimistic. Now, all of this is just simply information and times when that information comes out. What we do know is it could create a lot of market volatility at those specific moment in time, so be careful, have a plan in place. That, my friends, is your Monday Morning Must Knows. We'll see you next week.